Hey, and welcome back everybody to a new video here on our daily video series. Today we talk about supply and demand, what it actually is, how you can find great supply and demand zones, and how you can use them in your own trading. So let's first start with what supply and demand is. Supply, as the name suggests, is an area or a price level in that case where there were more sellers than buyers, and this imbalance then caused prices to fall. On the opposite, if you have a demand zone and if you have more demand than supply, then you have more buyers than sellers, and price will then rise until the balance has been reached again, and then price will consolidate again. So now let's take a look at our chart and see how we can find supply and demand zones. So where I always start out is I always tell people that you have to look for very large and very strong price movements that occurred and that started from a specific area, and then walk your way back to find the origin of that large price move. So now we have the US dollar Canadian, and it's very obvious and very easy to find those huge moves because they really stand out. So for example, here's a very large move to the downside that just suddenly originated from this area here without prior notice. Price just tanked. Then on the way down again, price moved a little bit here down on the market top, but then here it paused for a second for a few hours, and then suddenly it moved lower again, very strong from this area. And you can see this pattern everywhere, all over again, repeat itself. So you have this little consolidation, and then suddenly price broke lower and moved lower from the specific origin. So now let's grab our rectangle tool and let's mark those origins of those huge and strong price movements. So I always grab the rectangle, then I look for the origin, and I draw then a box around this area, extending it to the right to the most current and recent price action. And now you can see this is a very still a fresh supply area, how we would call it, because since this has formed, price never came back to it, and so there's probably a lot of unfilled supply left. And what we can then expect is once price makes its way back into this supply area, then we would expect to see more sellers come in and then push price lower again. However, it's very important to understand that you don't just place your order right here in front of this level and then hope price will reverse, but quite the opposite. In trading, it's always very important to wait for confirmation. So most people will just be in the predicting mindset. They will have their pending short order sitting somewhere here ahead of this level, and then just hope that price will then just reverse from this supply area. However, this is a very dangerous approach, and has more to do with gambling than actually trading, because you lack all the confirmation you should be looking for when you enter a trade. So instead of just having your pending order here and then hoping that something will happen, we wait for actual confirmation. So let's say price moves back into the level, then you don't just short right yet, but you wait to see what happens. Sometimes price will overshoot these levels if you're in a very strong uptrend, and then you don't want to be in a short trade, of course. Sometimes price comes short of the levels and reverses ahead of them, and there's nothing you can do about that. You can't chase your trades. Sometimes they will just turn ahead of your supply and demand area, and that's just the way it is. Don't start chasing price, except that such scenarios are not your edge and that you can catch those price movements. However, how you trade them ideally is that you wait for price to reach the area, then you wait and observe price action to see if price actually breaks it. More often than not, you get a little consolidation. Very often you get a fake breakout around those areas because it's very obvious that many people will watch this area. So generally you wait for price to come here, Then you observe the price action, and then and only then, if price moves lower and confirms that you have found more sellers again, you will enter your short trade here after price has already started moving lower. So this is your this little area here where you don't call the top. This is your insurance in trading. It's very important to get away from the predicting mindset and trying to call tops and bottoms. Instead, you wait for price to actually go in the direction you want to see it going, and then you enter your trade. So I'm not sure who said it. There's a famous trading quote where you don't try to catch the first and the last eighth of a trade, but you go for what is safe and in between. And that would be a very great example of such a scenario. So let's get everything off again. And now let's look for a few more supply and demand zones, and I will show you how this could have worked in the past. So here, for example, there's the little consolidation before price then sold off, and we can draw our rectangle box. You can see that price after this consolidation moved lower very strongly, and now you can see here price moved back into the range, into the supply zone, and then it found new sellers again and then sold off. You can see price made several attempts to get back into this area, but always failed and came short, and then eventually we moved lower. And then, as you can see, as price moved lower, we had another little sideways consolidation with a strong sell-off afterwards, and here again price then moved back into the supply zone. It found new sellers and then immediately moved lower again from the supply zone. So as you can see, if we put it into the big context, price was in an overall downtrend, and then you look for supply zones in that downtrend to time your trade following entries. In a downtrend, obviously it's not that easy to catch counter trend trades that would go long, so you would be very careful to look for demand zones and more focus on the supply zones to time your trend following entries. So let's take a look at a more recent example. Price has now been moving higher after finding this bottom, and you can also see there are a few demand zones now, especially this one here right at the bottom. Very interesting because price left very strongly. Then here again a bit more higher, and now we would wait for price to move again back into our demand zone. Then, as we said, we wait. We don't predict what's going to happen. We wait to find clues about the buyer-seller balance, and then if price actually reverses and finds more buyers again, then we would enter lot. If this one breaks, then we just wait for price to move into the next demand zone, and if now we find more buyers again, then we trade long from this demand zone. And that's basically how you use the concept of supply and demand across all the Forex markets. You can also apply to different time frames, but I'm a big fan of the 4-hour because it's a good mix between and a good compromise between the high daily time frame and the low 1-hour time frame. And you can use supply and demand to time your trend following entries, to look for reversal areas, and also if you are looking for exiting your trades, you can use the information of supply and demand zones for your profit and exiting of your trades.